Hi, Jeff Koppel, Realtor, General Contractor here at you again. Hey, the other day I did a video on seller finance, and basically I did explained how seller finance can be almost identical to a conventional first mortgage uh, loan. So today I thought I would do a video on the seller finance version that most realtors have probably heard of, or seller finance with a wrap mortgage. So that's the one that you probably have heard horror stories about, someone selling somebody a property, and the seller of the property collects the payments but doesn't actually keep up the underlying mortgage and all those kinds of things. So I thought what I would do is just kind of explain the pieces of it so that everybody kind of understand a little bit. And I thought the way I would do that is go ahead and pull up the documents that are going to be associated with a wrap mortgage. So, okay, first of all, a wrap mortgage, if you haven't heard that term before, a wrap mortgage is basically a new loan that's being created that is going to wrap around the existing mortgage on the property. So, in other words, the existing loan on the property, loan or loans, by the way, are not going to be paid off. They're going to be rolled into this new loan that's going to be created. So, in terms of paperwork, you still use just the standard 1-4. And on the sales price information, again, you're going to be focusing on item B here. You're going to be checking the seller finance addendum option. And then this information will be basically sent on over to this line right here on promissory note. So again, line B, seller financing dollar amount, is going to be transferred over to this line here, promissory note. And then on the seller finance addendum, you're going to have, the annual interest rate on the loan. And then down here under items C1, 2, and 3, you're going to select which method of repayment you want to have on this new loan. So it's either, one payment due at a certain date, monthly installments, or interest only payments, and then, the balance due at a later date. And then down here under the deed of trust, you're gonna tell, okay, if this property is resold after you sell it to this current buyer, do they have to pay you off or not? So that's what that area talks about. And then this item 2 here under D2, it's casualty insurance. Are you going to require casualty insurance on this loan or not? And then under item D3, are you going to require taxes and insurance escrow account or not? And then number 4 here actually kind of draws your attention to the fact, is in reference to a wrap note. In other words, if you're doing a wrap mortgage, here's what they're kind of drawing your attention to, is that any default under a loan superior to the loan securing the note will be under default of this note. Okay, so I thought what I would do is go into one of the disclosure forms that is now required by Senate Bill 43 that was enacted January of 2022. This is one of the disclosures that's now required with every wrap mortgage. And basically what it's doing is it's telling this potential buyer that this loan is being created without paying off the underlying loans, but that those underlying loans will actually be in a superior lien position. So a wrap mortgage at best is a second mortgage. And that's only if there's only one first mortgage on the property. Now, a wrap can be second, third, fourth, fifth lien position, depending on how many mortgages are on, ahead of it in the line of ownership, basically. So In other words, if you're looking at doing a wrap mortgage on a property that the existing owner already has a first and second mortgage, the wrap on that property would be third position. It would be a third mortgage. So anyway, this form now makes you detail information about the property. So, physical address, legal description, and then it's going to make you list out the information of the existing lien holders. Or actually here, this information here is the lender. So in other words, this is the person that's creating the wrap mortgage. That's their information right here. And then this is the information about the superior lien. This is lien one. So this would be the first lien position. And then if there's a second, it would be here. And if there's additional ones, you have to disclose those as well. Now, one thing I thought I would bring to the attention on disclosing the information to the underlying lien holder that you're doing a wrap. Right here under consent, has the lien holder consented to the transfer? And what this refers to is recognizing the acceleration clause that most mortgages have in them. In other words, under most mortgages that are written by banks, they will have a clause in the mortgage that says, if you sell this property without paying us off, we have the right to accelerate the note. In other words, they have the right to demand payment in full. Now, usually, or not usually, a lot of investors, when they create wrap mortgages, they will not notify the underlying lien holder, which is not a requirement, but they're willing to take the risk that, if it's discovered later that the property's been sold without a payoff of their loan, there could be an acceleration. So some investors are willing to take that risk and in a financial position to pay off that underlying loan if that indeed happens. But it's a good thing that they're requiring this disclosure now, because I know in the past it wasn't required, and there was some bad transactions that were going on. So in particular, Senate Bill 43 that was passed in January 2022, the key things that it brought to light, or doesn't allow anymore, prior to Senate Bill 43, investors used to do a lot of tabletop closings. In other words, they wouldn't go to a title company to close the deal. They would just do it at the new buyer's kitchen table, and that was perfectly legal. And it just, unfortunately, there was a lot of things that were missed, in terms of title issues and things like that the new buyer inherited, and might not have known it. Heck, the investor selling the deal might not have known there was issues. And like I said before, this is one of many required disclosures that are now required. And the buyer of a wrap mortgage is now allowed a cooling off period. So if they're given the disclosures up front, they're allowed 7-day cooling off period after they sign the contract. If they're not given those disclosures up front, they're allowed 21 days after the signing of the contract to decide if they want out of it or not. So that's definitely something to consider. The wrap lender now is actually held has fiduciary responsibility. So in other words, they can't just make this loan and absolve themselves of responsibility for it. They're on the hook for it. So, that's another thing that changed with Senate Bill 43. And there's no more direct payments to the wrap lender. I'm sure you've heard at least one horror story where someone sold a property on a wrap, pocketed the money, never paid the underlying lien, and the underlying lien holder foreclosed on the property. Well, now you've got to have those payments that are being made by the buyer. It's got to go into a trust, or in most cases, what people will do now is use a servicing company to, receive those funds and, make sure that the taxes are being paid, make sure that the insurance is kept up to date. So anyway, I think that Senate Bill 43 has been a good thing to, try to eliminate a lot of the questionable business practice maybe that was going on with wrap mortgages before. But anyway, I just thought that this would bring to light a little bit better of some of the negativity around a wrap mortgage. a wrap may be a viable alternative for, situations where, the property needs to be sold quickly, or, there might be a situation where this has been an inherited property that, the person originally took out the mortgage is now, you know, deceased, and, it's just easier to, continue to make the payments on the underlying mortgage. There's a number of reasons why you might do a wrap mortgage. But like I said, Senate Bill 43 in Texas, I think, has really helped clean this process up a little bit. So anyway, I hope that's valuable information to everybody today. And as always, if you guys have any questions about real estate related items or general contractor home repair items, go ahead and send me an email to jeffkoppel@gmail.com, and I'll be more than happy to make a video for you. Talk to you soon.